Hello guys, Tomasz here. Welcome to this new video. I'm going to talk about LC2A using the refined M15 swing strategy with LC models. Do not skip any of the previous LC content. Even though it's M5, the process is very similar, so I do not recommend you guys skip those lessons, right? Please watch those lessons first and then come back to this video. So GU, right? Let's start on the daily time frame. So basically we can see that we are bearish in the downtrend. Price push up, push back down. We know that after the daily boss, usually we tend to have a pullback. Okay, price swept the low, pullback, swept the low, pullback. Mitigate into premium prices, and once the premium prices is mitigated, this bullish objective may be completed, and then the lower high is then formed, right? What happens after the sweep of the low? We tend to have a pullback. So what can we expect? If you look left, we know that price after the daily pause and sweep of the lows, it tends to pull back. So we can expect some kind of a pullback, correct? And we also know that only once the premium prices are reached, for example, in this leg, price reached the premium, lower high, right? Price reached the premium, lower high. So I can expect some kind of pullback, ideally into the premium prices, EQ, right? Before lower high is created. So based on the daily time frame, we already know that we probably will be looking for longs, correct? Let's start and let's analyze the H4. Something that is also very important is analyzing the combination between the time frames. So we can see, for example, in this case, the daily, imagine daily post bearish. When do I know that the pullback of this daily bearish swing leg is going to start? Usually on H4 post bullish. Okay, so H4 post bullish, that indicates what? That the pullback of the daily swing bearish leg is going to start. Then on H4 post bearish, in line with the daily, the low is very likely to get run. Okay, look at this H4, right? Suddenly H4 post bullish. What that indicates that the daily bearish swing leg here to the left is going to pull back, correct? Then we reach the premium prices, and on H4 post bearish, the low is very likely to get run. So understanding this logic will position yourself in a very good scenario to capitalize on these trades, because we understand that once the H4 is aligned with the daily, we have a very likely probability, it's very probable that the low is going to get run. But focusing on the most recent price action, okay? This is where I want to talk about today. After the daily sweep of the lows, we can expect some kind of pullback. When do I know that pullback is going to start? We have a clean H4 chalk bullish, which is a very strong indication that the pullback may start. We also know that we are in discount levels, so it's worth looking for longs, playing that pullback right into the Q, right into the premium before lower high formation. So we can see that all my analysis for now are just on the daily and H4, and I have a very high conviction what I'm going to trade when coming into the lower time frames. So it's very important for you to base all your analysis always from the high time frame perspective. Price respect high time frames very well, and if you get caught in the lower time frames trying to play quick moves, quick pullbacks, it will end up in disaster. So yeah, keep the high time frames on the forefront of your mind, and only then drop to the low time frames. So let's see. H1 boss bullish after massive sweep of this low, right? You already know this one. So H1 boss bullish. What I can expect now? I can expect a continuous push to the upside, because we form a very, very strong protected swing low on the H1, right? Within this leg, what we have this very, very clean POI that, if you notice, this clean POI, let me see, okay, the pullback is probably going to start. So this POI is at the discount, right? It's not only that, it's also a flip, price push up, mitigate supply, push back down and push back up again. So this is a very valid demand at the discount right after the shift in structure on the H1. So I just want to look for longs, trying to catch the higher low formation and play the bullish pullback of the H4 bearish swing leg, right? The bullish pullback of the H4 bearish swing leg, right? So let's talk about the H1. So now I'm going to start playing this forward. And by the way, guys, this is very, very important. You only look for the entry model, LC, in this case LC to A. You only look for the entry model once the medium time frame POI is mitigated. I really don't want you guys to start looking for entry models around here. Only drop to the lower time frame M15 when medium time frame POI is mitigated. You can see that I base all my analysis on high time frames, and I don't even consider going into the lower time frames unless this high probability demand is mitigated, right? So let's start. Okay, so price mitigate this POI, right? Let's now drop to the M15. There are two possible entries that I want to talk about in this video. Is one possible loss, and then the other one it's a winning trade. But let's talk about the loss first, right? If you are a little bit more aggressive and you like taking these trades, it's definitely valid, where price form this kind of LC to A. Again, remember with LC to A, it's always on a BBID leg, right? On this right side. And not only that, these kind of trades, they are definitely valid, but at least from the way I trade, I trade these trades, but I know that these trades, when price extends, as it extends more and more and more, it becomes less and less probable. The ones that are super clean, I'm going to talk about that in a minute, you're going to see. But this is nevertheless still a valid trade because we have a chalk bullish, then price break the low and mitigate medium time frame POI. That's the most important thing, okay? Because if price, for example, did not mitigate the POI, for me, I'm not even consider looking to the low time frames. But again, let's start and let's talk about this possible trade, which was a loss, you guys, and I think it was here, let's see. Yeah, so you took the trade, right, with LC to A. Again, it's not necessary, I don't consider this being high probability, but yeah, it's definitely valid, so let's consider this one. And you take a loss. Okay, perfect. Price extends quite a lot. So now let's start analyzing what happens in this recent price action. This is when things get interesting. So what happens? We have change of character, and then we need to wait for this to go, right? So perfect. LC to A, it's valid, correct? So now what we do is that we mark the candle, and now we want to get involved at this price. If you use the PBL method, you know that this is the PBL, correct? And if this holds, again, if this holds and price for example, does not give you an entry and push back down, what happens? We know that price push back down, push back up, mitigate PBL, PBL held, form a lower low. So the entry is no longer valid and you need to wait for the new LC model, the new liquidity again, right? The way I personally approach this is I do not use the PBL method. So it's not something that I do consider. It's not better, it's not worse, it's just different, okay? You need to pick one and be consistent with it. Use what you resonate the most. There are pros and cons, okay? Use which one you resonate the most. But what I do is I don't use PBL, and once price give you the entry, I just set the entry here, okay? And now I'm waiting to get trigger. Even though PBL held and form a lower low, what I do, I still try to get involved. So basically, instead of having the entry here, because then this candle broke the low, the entry should be here for me again. Because if you forget about the PBL for a minute, imagine that the PBL was not here and was above, and it was still unmitigated. You would still try to get involved, correct? So that's how I do. Forget about PBL for this moment and continue trying to get involved. So even though PBL was mitigated, I still try to get involved. And once this candle broke previous candle's low, I'm here with this entry, right? And in this time you get trigger, and I don't know, I don't remember, but I think price even, let me see. Okay, and price continue moving to the upside. So this is the difference between using the PBL method or not. Again, it's not better, it's not worse, it's just different, okay? You need to pick one, the one that you resonate the most, and stick with it. So I'm going to talk again, in this case, about this entry, just to clarify any potential question. So imagine you have this PBL, right? Imagine that the PBL, let's say, for this video, imagine that PBL is here. When price gives you the entry, right, you still try to get involved, but because the PBL is still unmitigated, you keep looking to get involved, correct? So that's the same thing with the method that I use. I forget about the PBL method and I just have the entry here and I try to get involved. Once this candle broke this previous candle's low, I just adapt, okay? When do I stop? I stop when price fail, when the medium time frame POI fail, even by a weak break. Imagine that price is going down and weak, the supply and demand, weak through, right? Then I stop. I stop looking for the trade and I stop looking to get involved, because from my data, extensions is a little bit more low probability. Not, it still works, but it's not worth the risk, in my opinion. That's why, for example, in this one, the first one, right? This is when you can take the trade, but this is very different from this trade, because this happened straight away and this was a little bit more of extension, correct? So yeah, that's the video. Hope you guys like it, and yeah, see you soon. Bye.